If you're in your 20s and not investing yet, you could be throwing away thousands every year. But the key to investing halal, it changes with your age. Ignore that, then you're either going to miss out on a huge growth opportunity or retire broke. Just like your gym routine or diet changes as you age, so should your investing. You wouldn't bench press the same at 50 or eat just like you did at 20. Qualified in Islamic finance and as a chartered accountant, I've helped dozens of people in their 20s and 30s build halal portfolios. I'm going to be showing you a general strategy that works for most people, but always do your own research and adapt it to your own personal situation. And whether you're using Wahid, Trading 212 or Robinhood, the principles stay the same. So when it comes to investing, your age is your superpower. The younger you are, the more risk you can take. And here's why. Investing takes time. At any given moment, there could be a company going bankrupt, a global conflict, or some economic event, all of which will impact your portfolio. In your 20s, you've got an income from a job, not your portfolio. So you can handle the ups and downs and let your money grow. Whereas if you're older and relying on those investments to pay your bills, a crash could really hurt. Think of investing like planting a tree. If you plant it young, storms and bad weather don't really matter. You've got decades to let it grow. But if you plant it late and try to live off the fruit tomorrow, even a small storm can wipe you out. Meet Iqbal. He's just like you and me. Over the next few decades, we'll follow how his halal investments grow and evolve as he ages. If there's one thing I could go back and tell my 20-year-old self, it's this. Start investing right now, even if it's just £50 a month. Don't wait until you're earning more. Don't wait until you know everything. Just start. It's not magic. It's just time plus compound growth. So if you take only two things from this video, start investing now and maybe hit that like and subscribe button if you're serious about growing your wealth in a halal way. So at this stage, Iqbal's just finished uni. He's landed his first job. No major bills, and life's mostly just vibes. So yeah, he should definitely enjoy his money. But this is also prime time to build habits, and the best habit? Put investing on autopilot. Set up a direct debit so part of your salary goes straight into your halal portfolio the moment you get paid. But what exactly is Iqbal going to be investing in? Well, let's break it down the way Wahid presents it, and this is going to be similar to how other halal investing platforms also present the data. First, you've got global stocks. These are big companies from developed countries. These can go up and down quickly month to month, but over time, they're historically delivered some of the highest returns out there. This is where the real growth happens. Next is emerging market stocks. Think of Samsung and Tata. Same idea as before, but now we're investing in fast-growing countries outside the US and Europe. Think of it like global expansion for your money. Higher risk, but also higher potential reward. Iqbal also has the option of Sukuks. These are the halal version of bonds. They don't shoot up like stocks, but they pay you a regular income or a dividend and are going to be low risk and add some consistency to your portfolio. And lastly, gold. Not much introduction is needed here. Gold in your investment portfolio is mostly to do with the fact it operates in its own universe. It doesn't really have much correlation with Sukuks or stocks, so it's a good diversification tool. Okay, so how does Iqbal use all this? Well, right now he's in his 20s. He's young, has time, and isn't relying on investments money day to day. So volatility is a non-issue for him. At this age, Iqbal should be mostly in global and emerging market stocks. That's why Iqbal should invest in Wahid's very aggressive portfolio, which consists just of global stocks and emerging market stocks. You can also go with the aggressive portfolio, which has some safer products in it, but I would get him on the very aggressive one if he has no hesitations. Both of these portfolios have shown strong long-term performance. Over the past 15 years, Wahid's aggressive portfolio returned an average of 10.4% per year. The very aggressive portfolio, even better, 11.48% per year. To put that into context, the average return of the global stock market is around 8 to 10%. So Wahid's portfolios are right up there, even after staying 100% halal. So at this stage, Iqbal is still years away from retirement, but life's changing. He's got more responsibilities now, a family to support, a mortgage to pay, and even started a side business which he wants to grow. Because of this, it's time for him to start shifting from a heavy growth portfolio to something more balanced. I'm not saying he needs to make some drastic changes to his mix, but Iqbal can either stick with an aggressive portfolio or move to a moderately aggressive one. 49% global stocks for growth, 35% Sukuks for steady income, 9% gold for diversification, and 6% in emerging market stocks. As you add safer assets like Sukuks and gold, your returns will naturally be a little lower. This portfolio has averaged 9.2% per year over the last 15 years, which is still great, but the goal here isn't growth, it's about balance. A portfolio that helps Iqbal keep his hair and sleep peacefully at night whilst he builds wealth for the future. Now, if you've been investing since your early 20s, you'll be looking at your portfolio and thanking yourself. You will be miles ahead of friends who spent that £150 a month elsewhere whilst you're here planning for an early retirement. And just to put this into perspective, if you invested $1,000 20 years ago, you would have received a $66,000 in returns from Google, $105,000 from Amazon, $185,000 from Apple, and a whopping $650,000 from Nvidia. Back to Iqbal, and at this stage, I think he can still chase some growth, but it's smart to dial it back a bit. He's moving down to a more moderate portfolio, which is mostly Sukuks, about 50%, with the rest in global stocks, a small chunk in gold, and some emerging markets. So this portfolio has averaged around 8.36% over the last 15 years, which aligns well with the general market returns. I still recommend Iqbal keep some separate investments in individual high growth stocks, but for now, the focus shifts. It's about preparing his investments to become his long-term income source and figuring out when he can comfortably retire. So now as Iqbal moves to 50, it's time to shift gears again. At this stage, Iqbal's focus shifts to reliability. Stable income he can withdraw each month to cover his living expenses. And that's why a moderately conservative portfolio makes the most sense for him now. In Wahid's model portfolio, that means about 65% Sukuks, which provides steady dividends and keeps market value swings low, 25% global stocks for some growth potential, 4% gold to add some stability, and 3% emerging market stocks, small enough to not pose a significant risk to the overall portfolio. Looking at the numbers, this portfolio has averaged 7.5% annually over the past 15 years. That's solid, especially since Iqbal will now be withdrawing his investments regularly, but can still expect some growth. And this balanced approach is where his portfolio should stay going forward, helping him preserve capital while enjoying peace of mind. So have you seen, halal investing isn't just about avoiding the haram. It's about being intentional with how you grow and protect your wealth. Wahid and other investing platforms out there give you the tools to do so. And if you want to know more about these platforms, including what role Zakat plays here, then I'm going to leave a video next to me where I cover this topic. Go check that out, and I'll see you all in the next video.